All right, Robert, do you know when the real estate market will bottom out?
I know how to find out when it will or did. Maybe did is the word.
So, in this episode of Real Estate Chat with
Robert Eid.
and John Perez, we will find out. Now, whether you're a real estate investor, a real estate homeowner, a renter looking to buy as a first-time home buyer, or even a real estate hater, everybody wants to know this magical question of when real estate will bottom out. Perhaps you want to buy, perhaps you want to observe and see what happens. And even on our real estate chat, we've been having questions from some of our chatters, our viewers, of when do we think the real estate in Toronto and surrounding area will bottom out? Well, let's look at some charts and graphs here. This one courtesy of Ron Hoth, Toronto's bestdigs.com. Robert, why don't you comment on what you see here?
Well, this is the look at the average price, Toronto Real Estate Board, since January of 1972. And somebody with inordinate computer skills added these red blotches to it. And some people looking at it would say those red blotches represent the local or the temporary or the contemporaneous low points. And that if anybody knew what the low point was, then they would maybe buy then. And if we were talking about an index fund or a stock market trader or something or other, it would be significant when the bottom occurs. But what we're normally dealing, and this is a shortened down version, so it's more clear of where these points are. And there was a big rush up. This is price up and then fell down, and then it continued on a rush up and continued on. That most people are buying a property to live in. And as such, there's many more factors than just price or what the average price that month represents. They're trying to find something that has the qualities and amenities and condition and, not a thousands and thousands of dollars to improve required, so that they can move into the property and enjoy themselves from day one, or maybe they'll do one or two projects. You know when you reached a bottom by using the rear view mirror, and that's only when you can tell. Same as a peak, only in the rear view mirror. So to segue to the next section, we're looking at July. We're on the 28th here, and all of the component parts are examined in this little chart here, except for price. And in the top is the model, in the middle is what actually happened in the month of June, and the bottom is my projections based on what I perceive happened in July. And what we talk about here is inventory, new listings, the number of relists, do-overs, the number of sales, and then the number of terminations, like people who stopped selling, and we subtract from that number the ones that did do over because they're still for sale, and try and come up with something that starts and finishes in the same place. So in the very bottom box, July 28 projections, we start with the inventory at the end of June from the Market Watch, was 10,140, 10,107. So I'll say it again, 14,107. We add to that the guess about what new listings are going to be, which I must admit I did that last. But so I picked nearly 13,000, taking us to 27. Now, the relists, I'm going to say, were more than last month. So last month was 3331, so I said 3,500. And the sales, which we will talk about, is going to be about 5,500, so I put 55. And then the terminates, which I monitor every week, are around 5,500, minus the 3,500 that we said were going to be do-over, so 2,000, 2,100, coming up with 15,914 as what inventory will be reported on Market Watch in next week, in August, for the month of July. And the reason that I did that is I want it to be zero, because if all those things add up to correctly, then zero will be what, adding them all together from last month's inventory to this month's inventory. There we go. So,
which brings us to where in terms of inventory relative to the 10-year and 5-year averages?
Well, we're somewhere in between the 5-year and the 10-year average for the month of July, which, it's average. It's what it should be. You can see we're way up from where we were when people were talking about so slow and soft supply. So the inventory is, as the caller was saying, or the commenter was saying, is building up. And so be it. Okay, so sales, what are sales? Sales, we had the 22nd best July since 1996, which of 28 means it's subpar. So with 28 of the 20 reporting days already complete, we're going to say that we're 32% below the 5-year average, 34% below the 10-year average, 49% below a maximum July, which occurred in 2016, and 13% better than last year, which was the 26th best July. So July 23 is 43% off a hot month, which I'm saying is around 10,000. And we're 32 to 34% off the 5 and 10-year average for July. So we're in keeping with what's happened every single month except for May, when we were something like 14% off the averages. So it's a slow year, but because of the low number of listings, it's hot individually. And that's what I was sort of trying to mutter about in the when's the bottom question is, you look for the best one for you. I just did a transaction this month at a record price for this type of unit in that building of all times. And the fellow who was buying it said, how come I'm paying the highest price ever? The comparables say it should be less. And I say, we can't buy those ones anymore. And this one you really like a lot. It's got every single characteristic that you want. And it's in beautiful shape, and you can move right in when you want to. And there's no tenant to get rid of the condo. Everything about it is perfect. I said, yeah, okay. And so that's why you're looking for yourself. You're not looking at what the average is.
So in terms of sales, we look like it's pretty stable year over year. We're above, I mean, and below, of course, the 5-year and 10 years, but it's following the pattern. So there's nothing really shocking or significant that has affected these sales.
Well, that's because we're accustomed to being 30% below average. Now, if everybody that you ever met was 30% sick 30% of the time, or it was 30% shorter than what they should be, or used 30% more gas than they were supposed to, like, you wouldn't think it was normal. So we can't say it's normal. We can just say it's the trend. It's the way it is. And just like we accepted the boom, we'll accept the unboom.
So sales dipped. I mean, the rate hikes, the 2 big rate hikes that recently happened, you would think if they had a profound effect, which we'll probably see later on in the year, if that, but we're still above last year's sales levels, and it follows the pattern seasonally of what we see on a year-over-year basis. Let's look at pricing now.
Okay, you said the key thing. Everybody compares month over month and year over year. Last year's July was lousy. So the fact that we're exceeding by 13% does not matter. The only thing to compare it to is the 5 and the 10 year. Last year doesn't count. What if last year was fantastic? You're going to have fantastic every year? No, you can't have it. So you got to take a longer term life. Okay, here we are, price. The most important thing. Now, I thought prices were going to go up marginally in June over May, and I said it was going to go up like 0.5%, but it came down 1 point something. So I used the same 1.17%. That gives us a number for July, which is 168,289. Now, that also is the highest price in July ever. People seem to miss this significance of this. It's the highest July price ever. It is only 87% of the peak last February, but it is nearly 12.5% up from January of this year. And it's down 1% from June, which, if we look at the pattern of this whole graph, that's normal. That's what normally happens. Apparently, economists and other brains call people buying the price they want price selection. So that in July, there's a different number of buyers making their own personal price selection, and they buy at a lower price than they do in May, than they do in February. And we know that because they're following the school term, they're following the weather, and so it goes down a little bit. And so it did.
And so let's look at the school year, and then let's answer, did we hit the bottom, or are we at the bottom?
Okay, so this is the deleting the boom year. And this starts in the fall, September of 22, and goes through to the current time with those stars. And we see it's a pattern that's very normal, and we're not crossing any of the previous lines. We're not breaking down through the previous lines. We're following very smoothly a 2-year change of about 9% from 2 years before. And this is what the chatter and the noise, it'll delete it. So to answer your question, the real question is, how come we had a boomlet in end of February, March, April, and half of May? And that was all related to interest rates, which everybody knows. So that's why I was wrong. And that's how the market behaves. The market does what it wants to based on what it thinks is going to happen next. So were they tricked by our Tiffany Macklem? Yeah. Did he trick himself? Yeah. Does he know what he's going to do next? No. Is he going to listen to all the pressures that are on him? A little bit, but first he's going to continue to do what he thinks he's going to do. So is it the bottom yet? No. Is it time to sell? Maybe. Will next spring be better? Nobody can say.
So it quite could be possible that we'll see prices lower than this, is what you're saying. And I guess
an inverse relationship between interest rates and prices, and also consumer confidence. If consumer confidence continues to diminish, then people will be more inclined to do nothing, and supply and demand will change.
And so that's the answer to the question, have we reached bottom? The answer is it depends. Like if you're looking at a chart, you won't know it until we see, like if this were the bottom, you'll find out maybe next year, because you'll see prices consecutively go up. But as Robert just said, if consumer confidence wanes at this point, and if something were to happen, there could be further downward pressure on price. So the answer to that question is always time will tell, and we're going to have to see. Now, if you're looking to buy or enter the market now, or if you're looking to sell, Robert, what's your advice?
Okay, this is the time to look very carefully at the number of days on the market. Look at the number of what's the reason the person is selling. If that property is vacant, why is it vacant? And if there's an expectation of a certain closing date written down on the MLS listing, what do they want to do with the money on that date? Do they want to complete another purchase? Whatever. You're looking for a serious seller. And with a serious seller who's got a perfect house, and he just outsmarted himself a little bit by being a little bit too greedy in May, and maybe got bad representation on where the market was on his fabulous house, and now he's running out of time. That's the person you want to buy from. And you want to buy from him at an advantageous price, and you want to ask him for some concessions on mortgages, saying, oh, rates are so high, I wonder if you can just help me out and do an interest rate buy down, or give me a $10,000, which will be compensation for the interest rate that I have to pay. And you're going to find out that you can talk turkey with this fellow or this lady, whoever it is that's selling, because they're as interested in selling as you are in buying, and they're not giving it, I'll get more offers tomorrow attitude that we've had for the last 25 years. So it's a great time to buy. You just have to look hard and bargain harder.
Opportunities abound. So thank you so much for watching this episode of Real Estate Chat. If you liked what you heard, click on like, and make sure you subscribe. If you dislike it and tell us why. Make sure you type into the comments your questions, what you thought about this, what you think the market bottom will be, and what you think is going to happen to price. Stay tuned for next week when we find out what happens and if Robert was right on in terms of figuring out the inventory, sales, price levels of July. Thanks for watching. See you in our next episode of Real Estate Chat. Bye for now.
Bye.